Okay, Liz, thank you so much for participating on our YouTube channel that we always, display the game changers, the leaders like yourself that are doing things for the community. And like I always say, bringing that, adding that piece to the puzzle to make one uniform puzzle piece, to get to the bottom and really come with a solution to help with community. And that's what it's all about. So we greatly appreciate all the work that you're doing. Thank you so much.
Thank you for having me.
Okay, so what we always do, we begin all of our sessions by acknowledging the original stewards of the various lands that we are on. We also acknowledge our ancestors. We acknowledge all those who toiled without compassion or compensation. We acknowledge all the elders and community stalwarts whose shoulders we stand on as we build, share, learn for our collective liberation and sovereignty. So if you can please, Liz, do us the honors of introducing yourself to our listeners and viewers and tell us about your remarkable work.
Thank you. My name is Liz Simmie. I am the co-founder of Honeytree Investment Management. We're probably a little different than many of the financial firms that you're speaking to, in that we believe in impact in the public markets. And we're one of a handful of women-owned public markets investment managers in Canada. There's about 6. So we're the 6th, which is kind of tells you about the state of the investment industry. And we run equity portfolios. So we run concentrated portfolios of companies that we believe are responsibly growing. They're stakeholder governed and purpose driven. And because of that, they make a net positive impact on their stakeholders. And more importantly, they understand how positively impacting their stakeholders is what drives their bottom line. So to these large companies, impact is baked into their operations. And we'll talk about that, and our views on that a little later. But, we essentially manage what in the investment industry we call public markets, which is publicly listed companies and their related equity and their debt, versus private market impact investing. And we are about 5 years old. We're turning 5 next week. We bring together, I bring asset management background. So I worked for a firm called Bristol Gate starting in 2011 that managed a dividend growth strategy. And my co-founder, Paula, who many of you will know because she's been in the ESG and impact space forever, worked at Sustainalytics and MSCI. And so we came together, and we didn't think, we had a problem with how all the large asset managers and banks were trying to do ESG strategies. I always put ESG in quotes. And we thought, we could do it better. And, one of the key insights we had is everybody was doing gender lens only thematic products. And we said, well, why are we not looking plus gender plus racial diversity or LGBTQ diversity? And, we were at the point in time where this data you could get or you could systematize. And so we launched a firm. We're still small and growing, but we're trying to approach public markets investing from an impact first angle, and doing an execution differently than our peers in the space.
Awesome. Well, congratulations on the 5 years. That's amazing. And woman-led. Love it. Love it. And could you just articulate your personal mission and vision for us?
Oh, that's an interesting one. I have a lot. I avoided the investment industry because I didn't think I could find a role in it that made the world better. And so my personal vision and mission is to make the world better. And I've discovered that can actually be done in the investment industry, not just with the portfolios we build, but with advocacy related to that process, not just for corporations around the world, but specifically for our peers in the investment space, in all parts of the investment space, and how me personally, as an advocate for diversity in our industry, I can't spend my life analyzing companies' diversity without forcing our industry to reckon with our lack of diversity. And so one of my key personal missions is helping all the asset managers out there, big and small, public and private markets, the allocator side, the pension side, um, figuring out how to fix the really bad diversity problem that we have in this industry. And it's not easy to fix, but it's definitely fixable. And that's why I love having these conversations, because it takes a long time to learn about systemic bias and inequity and the causes of it, where those issues occur in firms, at what part, and in PR firms. I mean, as I mentioned, one of the issues with our industry is it doesn't look like you can find a job that makes the world better. There is a bunch of jobs, but we don't do a very good PR piece on, I always say we kind of look like the Wolf of Wall Street and a bunch of, you know, dudes in high towers making, ridiculous phone calls to bilk investors out of money. And there are so many jobs that make a positive impact in so many different ways in our industry. And people need to know that, and they need to know about all those options if they're even going to consider. So, that's what my mission is, and it overlaps with our work too. But it's my, and probably everything we're going to talk about today rolls up into that.
Right. That's amazing. It's so important to have these conversations too, because that's how we eradicate those things like biases and, you know, so it's vital, these conversations. So thank you. And what inspires you about your current work?
I get to look at what we call ESG data. I like to lump it more into like environmental metrics and workforce metrics of really big companies. And what inspires me, and just to be super clear, we don't look at very many investment management firms because they don't qualify for our process. What inspires me is the changes that they're enacting. Companies in the middle of nowhere in the US who have no reason to improve gender or racial diversity in leadership roles, driving improvements in those metrics because they understand how it benefits their business. Companies reducing their water use, companies, and these are not these are not companies who advertise it a lot. I think the more you advertise how much you're doing for DEI or the environment, the less you're actually doing for it. Because it's not, it's if you believe in something, like reducing water use saves you money and is good for the environment, and you can set goals for it, you can achieve them if you're a functional organization. If you're not a functional organization, no amount of goals or hopes and dreams is going to allow you to solve these problems. And watching which companies, and when I say large companies, I mean we look at companies generally $5 billion in market cap. So these are quite big companies and larger. Seeing them, not the flashy West Coast tech companies and not the big banks and asset managers in Toronto and New York, but everybody in between, figuring this stuff out and driving change and tying it to their operational impact, and they're not having a sustainability or an ESG or a DEI program separate from core operations, having all of those things baked into everything they do every day, and the responsibility of everybody running the company. And frankly, doing it before any of it became cool and everybody needed to do sustainability reports. So you wouldn't think giant companies would be inspiring, but they are, and the scale at which they're driving change is enormous. And the scale at which they're driving impact. One of my favorite examples is, let's say you have a retailer. We have a lot of retailers who fight minimum wage increases and don't pay, we'll call it decent wages, and fight unions and all this stuff. But there are a whole bunch of retailers out there who don't do that, pay well above the market rate, and still make lots of money. And their employers are happy, their employees are happier, their customers are happier, everybody's happier. And the investment industry, I don't think the rest of the world believes this, but the investment industry as a whole believes that paying higher wages is just bad for the bottom line. And there's a lot of economic theory that suggests that that's not actually true, just because it's something that was drummed up decades ago and folks took it as doctrine forever. Is getting in the way of true impact, and we'll call it impact in public and private markets. And you see that in belief systems, even among impact investors, that we can only make an impact if it's nonprofit, and the returns are lower, when in fact one can make money and make an impact. They're not mutually exclusive. So, that's that's what inspires me. I wish I could say I was inspired by the investment industry, but we just host lots of yay, we've enacted change in DI and we haven't enacted any change. And my favorite statistic, I graduated from McGill in 2005. 10% of portfolio managers were women, North America, in 2005. We have, I don't even know how many years. I still think I'm like 25. So almost 20 years later, we're at 11%. So all of these initiatives, and we're not even measuring racial diversity of portfolio managers. Hopefully folks get their act together and have some data sets on that soon. It would be really bad, just so we know the numbers would be awful and they would be the same. They would not have shifted. So all this, self-congratulations and woman and DEI initiatives, and more importantly, all these firms selling DEI linked products have made no actual impact on workforce participation in high paying roles across all parts of the investment industry. Yet random industrial companies in the Midwest have figured it out. And so I wish I could be passionate about that. I am very passionate about the topic, but there hasn't been any change. And people think there's been change, but there hasn't been any change. And there's a whole bunch of reasons for that.
Oh, I totally agree. You hear it all the time, DEI, 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 but where's the data to really see substantial and hold accountability of these industries to say, are you really making the change that you're saying that you're making? And the statistic that you just said went from 10 to 11. Yeah, the proof is right there. So on that line, what challenges or barriers have you faced, and what are you doing as far as coming to some form of solution? How are you able to overcome?
In the investment space, when you're a manager, doesn't matter what you're managing, the challenges are always raising money to manage. And so we're working on that. We've got a product in the US that we're working on. There's a lot of independent advisors in the US who have a little more flexibility than, we'll call it an investment advisor tied to a large bank, or especially, it's in, so there's a big market, and the market's huge down there. We call new managers in investment space, doesn't matter if you're private equity or stocks or bonds, we call them emerging managers. And you are an emerging manager, to be super clear, it's a very confusing term, but you're an emerging manager till in what we do, you're at about 5 billion, 3 to 10 billion in assets under management. And so when you look at the market, most assets, regardless of type of investment, are with giant firms, not emerging managers. And so all emerging managers, whether they are diverse led or not, face the same challenges, which is, size, right? And scale, and bias towards new ideas, consultants, favoring, the $1 trillion firms. I always joke that, we'll get past consultants when we're at 100 billion in assets under management, which would make us kind of like the 8th largest asset manager in Canada in the public markets. And so, that's across all industries. That's the way we look at it in our research for big companies is it's supplier diversity. So a big company, a big retailer, they could rely on 4 or 5 big suppliers, but that's a business risk. And so what they have to go out and do is build capacity among small suppliers, which is also where diverse suppliers generally live in most cases. And so the work that the industry can do on small and diverse owned suppliers, since 100% overlap, essentially, with very few exceptions, is what's much needed in the industry. And one of the reasons we're focused on the US market is because they actually get that. Canada is very behind in the investment industry, very specifically on emerging managers. And just to give you an idea, my old firm, the first emerging manager platform they got on was a big bank platform in the US, not in Canada, right? And for an emerging manager platform. And so there's a mindset in the US, and again, we see it in our companies. This year we were able to pull small and diverse supplier dollar value spend from most of our companies. Whereas that data was kind of a little patchier for the past couple of years. Now it's being formalized into what will eventually be true financial disclosure, but it's, they're putting it in their sustainability reports. So trying to shift the industry in Canada to say, hey, if we want any more innovation or future new companies in investing, we have to figure out how to support the smaller companies. And Quebec's kind of done that. So Quebec has an emerging manager. All the big asset managers were like, hey, we need more than 10 companies in this province. Why don't we pool a bunch of money together? And when a new manager comes up, we'll give them $5 or $10 million, help them, get going with their track record. Now the problem with that program is they don't have a pool of diverse emerging managers, and so now they're trying to find diverse managers. So we're helping various groups with that in Canada. But no offense to Canada, why would we spend much time up here when the US has already figured it out? There's many pensions in the US with diverse manager seeding programs. There's many advisory teams with clients looking for not only ESG strategies, but ESG strategies delivered by teams who are believable in, understanding DEI and the environmental stuff. And it's a bigger market. And it's not any more expensive to deal with. But one of the reasons the US is ahead, I worked in market research early on in my career. And in Canada, when you do a survey, let's say you do a telephone survey from the old days, or like an internet survey, we never asked racial diversity. In the US, every time anybody asks any questionnaire, you have to select. Now, don't get me started on the problematic issues with the boxes. Like in the US, they lump literally every Asian together, and they, don't have any carve outs for any, everybody east of Turkey and east is from Asia. But the point is the folks were used to it as a box and more comfortable discussing it, not particularly any better at it, but more comfortable discussing it. And so we just know that there's more entrepreneurial spirit in the US. There's more recognition of us as a very rare, diverse-owned firm doing ESG related strategies. There's not very many. Lots of hedge funds and private equity and venture capital stuff, and traditional impact investment firms. But in the public markets, there's not that many. You can't do much research on it. If you want to do research on woman-owned hedge fund managers, your sample's like 40, right? Like anyways. So those are the big barriers for everybody who's starting in all types of investment firms. And frankly, they're the same for an investment advisor or anything. But those are the key ones. The other thing I will say is there is a core group of impact investors out there who don't believe in public markets. They think that only privately listed companies, not publicly listed companies, make an impact. And there's a bunch of reasons for that bias. But what I'll say is, let's say you have two windmill companies. They make the same amount of windmills. They provide the same amount of renewable energy. They have the same operational negative externalities and positive externalities. They're the same company. And one is publicly listed, on the New York Stock Exchange, and one is a private company. How is their impact different? How is the impact in ownership different? The companies. I'm not going to go into the reasons why these beliefs exist, other than they exist. There's a little bit of FOMO mixed with traditional beliefs that only direct ownership causes impact, and private equity and venture capital are cooler asset classes to certain investors and not accessible by the retail folks. That's a little bit of a bias. So we run into that at, firms that are devoted to helping diverse managers start. They don't mean diverse managers in the public markets. They mean a venture capital fund that invests in diverse founders, not literal investment firms diverse owned. And so so that was a fascinating discovery for me, diving into this market, because you would think, if folks cared about it, something like 1% of institutional AUM is run by women and racially diverse folks, and firms owned by, and then I've already done the stats. Funds managed by diverse folks, it's much smaller percentage, and we can make these changes, and they're just as important from an impact perspective, especially given this industry, as all types of DEI related impact. And so that's why I'm so passionate about what I do, because we in the impact sector and philanthropy, don't even get me started on philanthropy. Philanthropy is just as much of a disaster on all of these metrics. We're not going to talk about that today because our conversation will be 10 hours long. But we can fix it. I'm optimistic we can fix it, but I haven't seen any of the actual fixing happen.
Bravo, man, that's a lot to unpack, but I'm telling you, everything you're saying is so true, especially the behind part between Canada and the US. I lived in the US and I saw it with my own eyes, and I see coming back, a lot of things we are lacking in, as you're saying, the straightforwardness that I've seen in America compared to Canada. Check boxes is one of many things that we need to sit and really have the conversation on. Like, we need to make these changes. Big time. And okay, so what about your key priorities? What are you working on right now?
Raising money in the US is our key focus. We have a retail available product that's targeting advisors mainly. And so it's a very B2B sales activity. We're trying to do it with as little emissions as possible, mostly because I don't like flying very much. And servicing the Canadian market is difficult from a travel perspective. Servicing the US market has more problems from a distance perspective. But COVID was very interesting, because this business used to be very meet for lunch in offices, no matter where, Omaha, where, middle of nowhere. Sorry, Omaha. I went to Omaha for the first time like a month ago. It is in the middle of nowhere. And so firms that are with large sales budgets could easily outcompete any new firms, and new firms that were competing needed to spend a lot of money on travel. Because of COVID, everything's gone online. And what would have been an absolute no-go before, which is not meeting an advisor or allocator in their office, is 90% acceptable now. And so that's changed how we can do stuff, who we can approach, all these kind of things. We're also trying to figure out bringing vehicles to Canada, and what that means is an ETF or a fund available to investors in Canada. And we've been working on an affordable housing related vehicle for a while. Maybe we figured that out, not quite sure. Getting, balancing who the products are for, who's going to buy them. We've always been for the people. The problem with for the people is only rich people have investments. Like, so we're not really for the people. Solving decent pay and a whole bunch of stuff is for the people, and we work on that in our advocacy. But we're trying to figure out, we have a Canadian equity strategy, and obviously we would never launch that in the US, and so we're trying to figure out how to get that into a vehicle so that everybody could buy Honeytree's Canadian equity strategy in their RSP or whatever. So these things cost lots of money, and they're very risky, and it doesn't matter who's paying for them. The big asset manager, the BlackRocks of the world or whoever, launch products and have to close them because that's a very interesting distribution cycle. But it's a fun business. Talking to advisors and allocators is especially about these topics is always cool. That's one of the fun things about this industry is no matter what role you're in, with the exception of a couple big computer quant nerds stuck in corners, it's a people business. It's a communication business. It's a storytelling business. It's lots of marketing, all this kind of stuff. It's when you have an innovative product, it's changing belief systems, changing storytelling and all that kind of stuff. And that's what we're dealing with. We're dealing with our product takes a completely different approach than most of our peers. We throw out traditional frameworks because traditional frameworks are bad for innovation. That's one of the key issues our industry does not understand, is you can't keep on doing stuff through traditional frameworks if you want systems change. But yeah, we're a small team, and we're adding a partner. We added a partner last week. We're a bootstrapped firm that there's not that many like us in Canada, but we know what we're doing, and it's lots of fun to do.
Awesome, awesome. So tell me, how you feel about the future of social finance in Canada right now?
So I'm optimistic despite all of the things that I'm going to say negatively about social finance. Going back to the biggest issue the investment industry has, and all things tied to it, philanthropy, the government, all this kind of stuff, is we keep trying to enact systems change without changing the structure and the beliefs and the systems framework through which we're trying to enact this change. Sorry, I'm going to stop for 1 second because my husband's coming in.
Sorry.
It's going to be loud. So part of it is, and we see this in ESG, and I'll give an ESG example. Traditional financial models suggest that the purpose of a corporation is to make money for its shareholders. And so traditional portfolio management models and what they use don't have room for humans and the environment in them. And so in order to use humans and in the environment as metrics in your process, you have to get rid of the old structures and come at it from a different angle. And that's what we do. And the same is true for impact investing in philanthropy. What I see a lot of is savior complex. And it's difficult to communicate this to folks in power in the impact investment and philanthropy world because they don't get it, because they're enacting savior complex for the most part. But there's a lot of, we here in Canada and the UK and the US are smarter than everybody else, and we can solve the world's problems. And there's a lack of understanding of why those problems exist. Who caused those problems, lack of willingness to discuss any of the words related to, the historical structural biases and systems that were created that caused in part of it is just pure education. Then you grew up in a finance program and the GTA and went to work at a big financial services firm. You've never encountered most of this stuff in your life unless you were heavily involved in a lot of governance and nonprofit work and not just like bias training. Like, it's very, I do, saying the word colonial in the investment industry, with the rare exception of a very specific subset of deep impact investors who we'll call it take a relatively indigenous, led mindset to their investing, is like a bad word. Yet, historically, a lot of these problems we're trying to solve, you have to acknowledge some of this, actual history that happened. So I think as generations now, to be super clear, I think I'm a millennial. I think there's a lot of millennials who don't understand this, but they do understand it a little bit better than older groups. And it goes basically back to diversity and representation. Edgar Villanueva, who I had the fortune of hearing him speak at an amazing social impact philanthropy conference. Was definitely the best conference I ever went to. His book and his research focuses on philanthropy and the decolonizing philanthropy. And he points to basically 85% of the dollars earmarked for, and I'm going to screw up the statistics, Black and Hispanic causes in the US. 85% of the dollars go to white voters. And you can just see the systemic issue there. And we're doing the same thing in social finance. And we're trying to fix it. But even when you fix it at the organizational level, you're missing it at the funder level and all this kind of stuff. And I do see folks trying, but it is something that we, that's glaringly obvious to anybody who's done a lot of, we'll call it true social impact work outside of the financial side of things. And I hope, and I don't want to see things split into pure nonprofit, deep social impact, and everything else. There needs to be a crossover. And the reason I know that there can be this crossover is you go back to, I like to use the Mennonites in Canada as an example. Mennonites were big early impact investors, mostly because they had a bunch of excess money and they were not going to invest it in a way that countered their work in the community. And most importantly, when they set up their impact programs, whatever they were, they set them up, and there's lots of issues in there too, but we're not going to talk about those. When they set them up to be self-sustaining, right? And so there's this, the original impact investors, whether they're nuns or indigenous groups or Mennonites or students, protesting for divestment of stuff. The true intention is that we can live in this pseudo-capitalist system if companies are addressing their negative impacts and improving their positive impacts. And so, but you can make money, and I always go, you can go to pre-capitalism. Indigenous folks in North America were running lots of successful businesses before, Western capitalism or whatever was imposed. So it's not, I want us to come together and realize that we can do less bad while making money and still make money and be a prosperous country across all types of investment. And I don't see very much of the social finance space believing that now. And I want it to stop being separated into, as separated and siloed as it is, because collaboration is the only solution for systems change at all levels. And right now we think we're collaborating, but we're not.
I love that end piece. Collaboration is the only solution for systems change. I need to put that on a shirt. Because I'm 100% behind you with that, There's, what's that saying? If you want to go fast, go alone. If you want to go far, go together. And I truly, truly believe that. So I think we covered like the ultimate goal, but let's summarize your ultimate goal and what does success look like to you and your colleagues?
Yeah, we'd like to raise lots of money and have a great performance track record. We'd like to build a non-traditional team. Investing is very hierarchical. We want to be inspired by Indigenous values and run very kind of flat organization and collaborative organization and use the help. We're never going to be that big. A firm like ours, success is, $3 to $20 billion, and you don't need a big team to do that. My old firm manages about 3 billion. There's about 14 people. And so the ultimate goal is bigger than Honeytree. The ultimate goal is the influence we can have on our peers in helping them understand how to truly integrate this data, how to look at, how to use, how to take an impact first approach in public markets and private markets as we get into private markets, and through sharing and collaboration and, not hiding, our innovation and our expertise. But the real ultimate goal is fixing the investment industry. It's a disaster from every single DEI lens you could possibly put on it. It's a disaster. And I like to use two very specific examples. Indigenous trusts in Canada have a lot of money. Investment firms make a lot of money off of trusts. There are, last time I got the number, fewer than 12 Indigenous CFAs in North America. And that was from market, there's a couple. The Reconciliation Responsibility and Investing Initiative, Natala groups organized there. And so how we as a Canadian business, all the Canadian business. And we actually look at reconciliation and Indigenous issues when we're looking at companies, and we're one of the handful of companies to do that. But a big bank, I'm going to pick on RBC and TD because I know they make lots of money off this stuff. The impact they can make is not donating to Indigenous causes or, providing some scholarships here. It's literally hiring Indigenous analysts, hiring Indigenous folks in all across their operations and all across their various parts of their banks and asset managers. And they have the resources to go out and figure this stuff out. They don't, because of a variety of different reasons. And the same thing is in post George Floyd. I like to pick on the industry because there's just so many excellent examples of opportunism post George Floyd. Everybody was like, I'm gonna not swear. We got to go figure out how to, make sure Black folks are more included in the industry. And what we saw from big asset managers was and small was a series of donations to causes related to Black folks in Canada. What we did not see is hiring commitments and figuring out how to hire Black people into investment and investment adjacent roles at these asset managers, and to figure out how to solve those problems, which are completely solvable. Now you got to retain folks, so you can't just go out and hire, which is a whole other great set of data. But that's my ultimate goal, is to literally help the big asset managers to just keep on saying these statistics again and again and again, because I know when they click, it's what helped me understand the true systemic inequity in all sides of the industry. You gotta have this data, you gotta have this evidence, and you gotta understand what caused that, or you gotta understand, a handful of the reasons why it happened. There's the banks and the big traditional asset managers are so behind on multiple occasions. People running big ESG and impact practices in various large firms have said racial diversity isn't measurable. It's in the eye of the beholder. And so this is what we're dealing with at the firm level. So the more annoying people like me repeat these statistics over and over, and to be super clear, provide assistance to these large managers to help them figure out why they can't recruit or retain any women or any racially diverse folks, or why their senior LGBTQ folks don't come out at work, or why they keep on losing women who take parental leave and none of the guys take parental leave. All these systemic things that create and perpetuate these inequalities are so easy to fix, and I'm seeing them being fixed outside of our industry. And so we just need to push a little harder on all sides of our industry, not just at the social finance impact level of the investments, but in the industry and the service providers and all this kind of stuff related to that, because it is an impact, and we can change it. We just need to try way harder and do a lot more work.
100% behind you. So, oh my goodness, I just love this interview. It's so forward, it's so direct, and I love it. We need it. Canada needs that shakeup. And again, when you compared, US to Canada, this to me is so relative to how America speaks. Straightforward, this is what's going on. Not to say that things are moving in the way that we want it to move, but at least, that forwardness is being, had, let's put it that way. So please, Liz, do you have any closing thoughts or calls to action at this time for us?
Just, you can't change systems by using old systems. Doesn't matter who you are or where you are. And that's the biggest thing that we need to shake off in all of social finance and the whole investment industry, is it's the key barrier to innovation. It's the key barrier. It's why none of these firms can hire and retain women at senior levels. It's why ESG looks like it's greenwashed. It's all these things are purely because we're taking old systems and trying to plug new things into them, and it's not working. And so just, throw out the old systems and and start from scratch and do it from a different perspective. And I think Indigenous values and the education provided by various Indigenous folks in North America to all groups is a really good place to start. And there is for anybody involved in asset management, the Reconciliation and Responsibility in Investing Initiative has tons of resources just for the basic Truth and Reconciliation Commission business principles and how you implement them in your business. And I see a lot of folks with, their land acknowledgements on their website, just like everybody signed the PRI, which is the Principles for Responsible Investing. But it's about a lot more than that. And just go out and figure out how to hire Indigenous folks. And if you can figure that out, you can solve all of the problems. And that's where we are. We just need to take a step to solve some of these issues, and the skill set. And it's so the same reason we have no women in the investment industry is the same reason we have no Indigenous folks, is the same reason we have no Black folks. It's exactly the same reason. And so taking a new approach and figuring out one of them will lead to figuring out all of them. And even these big banks in Canada can figure it out. They figured out it in parts of their, businesses a little bit, and they can do it on the investment side.
So true. Like out with the old, in with the new. Like, I wrote down here, data-led systems change. Like if we, with data, with this new form data that's being collected, that's how we can get some firm changes going on, because it's right there in your face. Like there's no guesswork, in data collection. So, oh my gosh, Liz, this is so remarkable. I really appreciate this. On behalf of Setsi, we appreciate this, and we appreciate you for all that you're doing. We wish you all the power in the world to keep up the good fight. And thank you for being that, that fundamental piece in this puzzle that we're trying to, solve.
Thank you for all of your work. I've been a fan of Setsi for a long time, and thrilled to have this conversation today.
Awesome. So we will close the way that we began, as in this interview, by acknowledging the original stewards of the various lands that we are on. We also acknowledge our ancestors. We acknowledge all those who toiled without compassion or compensation. We acknowledge all the elders and community stalwarts whose shoulders we stand on as we build, share, learn together for our collective liberation and sovereignty. So once again, Liz, thank you so much. I hope you have a wonderful rest of the day, the week, until we meet again.
Thank you. You as well.
Okay, ma'am. Bye-bye.